Welcome back. My name is Randy Helm, and this is the fifth video in the cash management series. In this video, we will delve into the important topic of controlling accounts payable, or AP. Effectively managing your AP is crucial for optimizing cash flow, maintaining good vendor relationships, and ensuring timely payments. Now, if you're ready, let's begin. Accounts payable refers to the amounts that your business owes to vendors and suppliers for goods or services received. Controlling accounts payable involves implementing strategies and practices to manage your payment obligations efficiently. Controlling AP is essential for several reasons. Firstly, it helps you maintain positive relationships with your vendors. Timely and reliable payments build trust and often lead to better pricing, discounts, or favorable terms. If you are habitually late or don't send out payments when you said you would, your vendors are going to realize this and might start to charge you more. Secondly, managing AP allows you to optimize your cash flow by effectively controlling payment schedules and prioritizing payments based on available cash. You can maintain healthy liquidity and minimize the risk of cash shortages. Let's explore some of the best practices for controlling accounts payable. When establishing vendor relationships, negotiate payment terms that align with your cash flow needs. Consider longer payment windows or discounts for early payments if feasible. Keep in mind that their default payment terms might be short, but they might be willing to change the terms they have with your company. If you don't ask, the answer is always no. Assess your vendor's importance to your business and their impact on your operations. Prioritize payments to critical vendors, ensuring a reliable supply chain and maintaining their trust. For example, if you manufacture products using lots of steel, you will definitely want to prioritize your steel supplier payments over perhaps less essential suppliers, such as those that might refill your on-site vending machines for your employees. It's not to say supplying employees with vending options isn't important, but your bread and butter require the steel. It ranks higher on the scale of importance and urgency. If your cash flow permits, make use of early payment discounts offered by vendors. This can help save you money and improve your cash flow by reducing the amount paid for goods or services. The discounts might be good enough that you might even push back a few other vendors in order to take the discounts. When you take enough of the discounts, you wind up with extra cash to help get those other vendors back on track. When a vendor offers quick pay discounts, especially without you asking, they already have this built into the price they are offering. So if you don't take the discounts, you are effectively paying more than necessary. Efficient invoice processing is crucial for controlling accounts payable. Consider the following practices. Establish a centralized system for receiving, processing, and approving invoices. This improves efficiency, reduces errors, and ensures timely payment. For small and medium-sized businesses, there are very few reasons to have multiple departments that handle accounts payable processing. That is a misuse of company resources. Verify that received invoices match the goods or services received and agreed upon pricing. This helps prevent overpayment or incorrect charges. If you use a purchase order system, this could certainly help with the process. If you've ordered 100 of an item but only received 90, you don't want to pay for the 100 items. Define clear procedures for invoice approval, payment authorization, and signatories. This ensures accountability and minimizes the risk of unauthorized payments. You don't want a random AP staff member to feel pressured to make a payment, only to find out that the appropriate purchasing manager did not approve it. Perhaps the wrong products were shipped, or the wrong quantities. This is why you need to have clear procedures in place for each step of the process. It matters who can approve which functions and actions. Technology can greatly assist in controlling accounts payable. Consider utilizing accounting software or enterprise resource planning systems that offer accounts payable modules. These tools can automate invoice processing, streamline approval workflows, and provide real-time payment tracking. A key feature in most accounting software prevents an invoice from being entered and paid twice. When you go to enter an invoice number a second time, you will be prevented from doing so, or at least warned about it. This feature is not discussed much, but can be quite valuable. Make sure your AP staff are consistent in how they enter the invoice numbers. Suppose that sometimes they add hyphens and other times they don't. You will not get this safeguard and could waste your money. When managing accounts payable, it's essential to align payment schedules with your cash flow. Consider the following. Refer to your cash flow forecast to determine available cash for payment obligations. This helps you prioritize payments and avoid cash shortages. Sometimes, paying a given invoice just a few days later can make a world of difference. For example, your bank account is running low, and your cash forecast indicates that you are expecting a large deposit in the next couple of days. There might be some invoices where it makes sense to push those off until after the large deposit hits, based on your forecast. In the case of cash flow constraints, maintain open communication with vendors. Negotiate extended payment terms, request payment plans, or explore mutually beneficial solutions. In many cases, vendors will be open to working with you to ensure that all goes as smoothly as possible. Let's summarize the key points we've covered in controlling accounts payable. Efficient accounts payable management is crucial for maintaining vendor relationships and optimizing cash flow. Negotiate favorable payment terms and prioritize payments based on vendor relationships. Implement efficient invoice processing procedures and utilize technology for streamlined accounts payable management. Align payment schedules with your cash flow and maintain open communication with vendors. Effective control of AP supports healthy cash flow and fosters strong vendor relationships. By implementing these practices, you can maintain liquidity, improve your cash flow position, and ensure a reliable supply chain. Now that you understand the best practices for controlling AP, we can move on to explore strategies for optimizing inventory management to further enhance your cash flow. Join me in the next video. Until then, have a good day.